Hey everyone, how's it going? It's Joshua Ferris here. I wanted to bring some information to you regarding what the situation is going on here with the real estate market and the current crisis that we have going on right now. So I wanted to give some macro perspectives here on the economy and what I'm hearing when I'm talking to investors and my experience when I'm interacting with residential sellers and buyers here. So first, I want to focus on the big picture, the macroeconomics, and we're just going to get into some basic economics 101 of what's going on and how that's going to affect, or what we might assume that might affect the real estate market. And then secondly, I'll give you some perspective as a real estate agent on what I'm seeing and what I'm experiencing out there on the field, so to speak, interacting with sellers, interacting with buyers, and interacting with investors. So I made a couple notes. I'm going to keep this fairly broad. I'm going to make another video that's really going to focus on investing and possibly what you can do to put yourself in the best position possible if you're looking to take advantage of the situation and just protect yourself too if you already own real estate. So first thing, let's talk about macroeconomics. So as we all are aware, I just want to reiterate what's going on. Everything's basically on a pause. As far as looking back, a lot of people look back on 2008 as what we're going through right now, saying, oh, well, this is very reminiscent of 2008. Well, it's really not. So there are some underlying issues, some debts coming due, and some bad loans that were written in the housing market that predicted 2008. So currently right now, we don't have a lot of those same situations happening. Lending practices have been a lot better in the last decade or so. And so we're not seeing a fundamental crack in the system or issues in the system for the housing market. Now, obviously, debt does come into play with this, both corporate debt and family debt, so the credit cards or house. And then, of course, a certain debt with businesses. But fundamentally, that's not what's causing this issue. So fundamentally, the economy seems to be in a pretty good state. Obviously, with interest rates being so low, that can be an indicator that there's some problems. But fundamentally, I don't see there being a real huge issue with the economy as a whole. Now, with that being said, there's of course going to be some issues with this pandemic continuing, and depending on how long it lasts, the severity of the furloughs and the businesses, and whether or not it's you work for a corporation or whether or not you have your own business, like say a restaurant. So located here in San Luis Obispo, Central California, for myself, there's a lot of business owners that own their own businesses, and there's also a few big employers for the area. So we can all know what's going on with big employers. So for example, let's say take MindBody, which recently laid off hundreds of people. Now those are good paying jobs. And what's going to happen with that is those people are going to have to look for a job or wait to get rehired back at their old employer, that company, next month after this blows over, hopefully. Now, if everything gets back to normal, or we have a gradual get back to normal situation, I anticipate there's going to be a lot of rehiring. People are going to get back. It's going to be slow. It might take a few months, but it's going to get back to normal. However, if this drags on for an extended period of time, we're going to have some real problems. And so I think that's what a lot of people are saying, the economic people that I'm listening to, people in the real estate industry who have multiple billions of dollars worth of real estate assets, and even other people who I'm just talking to at a personal level. A lot of this, the severity of this situation and how it's going to affect the real estate market depends on how long it's going to last. A couple things that I want to talk about specifically in this macro element has to do with supply and demand, right? So there's a certain supply of housing and a demand of housing, purchasers, and their ability to purchase the property. So part of their demand and the increase of cost of real estate has to do with the buying power of the actual borrower. So very few people buy homes completely on cash. Usually they take out debt to buy real estate, especially if that's their primary And if it's their primary, they're hoping that it appreciates, like in California here, at 2 to 3, sometimes 4% per year. So it's a good purchase when it's increasing in value over the course of the time that you own it. Now, something to keep in mind, lending practices, or lending right now is a little bit tighter because there's increased volatility and there's increased risk. So while we're seeing the Fed decrease the interest rate, we're not really seeing that play out for borrowers. So that's something to keep in mind. It's more difficult right now to get a loan because one of the furloughs, and the added risk that these lenders are seeing, and there's some tightening. So generally, if it's a broker that you might be working with, they will sell their your loan to a bank or an institution that actually will sell it to investors. So a lot of those banks and institutions are not they're not as able to sell those over to investors because of the increased volatility. So a lot of these smaller brokerages have tighter restrictions, either if it's with Fannie Mae or Freddie Mac, or just regular investors that they would be selling the loans to private banks. So my advice for that, if you're having troubles with a broker for a mortgage, maybe look to an institution that actually keeps their loans in-house. So this might be something like Bank of America. So they will still be able to underwrite the loan there in their bank, and they actually keep the loan there and service it themselves. So that's the difference between a broker and a bank getting your loan through a bank. So I've got some notes here. I'm looking at these. Okay, so supply right now, from a big picture, we're seeing a decrease in new listings, and that's a good segue into my second part of this video, which is what I'm seeing as a real estate agent, interacting with sellers, interacting with buyers, and interacting with investors. So first I want to talk about sellers. So personally, right now during this time, I might have 4, 5, 6 listings that I'm bringing to the market or have on the market during springtime. Right now, the sellers who are interested in selling during springtime have postponed. They put it on pause. They've said, look, we're not going to list right now. We just want to wait and see how this plays out. That's what I'm seeing. I'm still interacting with sellers. They're still interested in selling. We're getting the photography. We're getting things set up, but they're putting it on pause because they either don't want people coming into through their house, or they're just not sure if there's going to be a lot of buyers out there looking right now, which is a good segue into the second thing that I've been observing. Buyers are still out there. I'm still getting calls to show property. I have showings set up for today, and I had showings yesterday. So what I'm seeing is that we need to be more careful about this health and safety practices. So we need to wear masks, we need to wear gloves, and we need to have hand sanitizer, and just be mindful about touching things. There's also a new form, which is an advisory form that buyers and sellers need to sign, just as basically identifying the potential dangers here with the virus. So there are forms to just keep people understanding what's going on and that they're being careful. I can give you some real example right now. I set up 2 showings yesterday and have 5 showings scheduled for this evening, and none of those folks said that you cannot show it because of the virus that's going on. They all said that's okay. There's that form that we need to sign, so we'll get that signed, and we'll wear protective clothing. Obviously no open houses, so that's deterring some buyers, but if buyers are out there and they're interested in buying a property, there's some great opportunities to get some good deals out there. So those are some things that I've experienced with my buyers. They're still out there looking. Some of them have been put on hold. For example, I had an off-market transaction that I was helping a client purchase, and he's not able to purchase right now. He'd love to. It's a great fit for him, but he can't purchase it because he was furloughed from his job, so he can't get a loan. He's only on one income right now. Fortunately, he does have a house already, and he's able to wait this out, but we'll have to just wait and see. He might be able to purchase in the next month after he gets rehired. But that's what I'm seeing right now for a client of mine. As far as investors are concerned, they are still looking for, they're looking to purchase. So as far as purchasing as an investor, and I'll get into this on another video a bit more, but as far as an investor that's purchasing, they're probably looking for increased rate of return because of the increased risk and volatility. But I still have investors who are submitting offers, who are actively searching the market. As far as sellers, I did get a seller from a letter that I wrote who expressed interest in selling a big apartment unit near me. So they're still selling. Maybe they're not quite as the inventory is not as high as it normally is, but there are still people that are selling. So I'm seeing fairly normal action as far as that activity. And then let's talk about the last part of this video. And I really want to get into more details in subsequent videos, but this one's just an overview of what I see happening. But let's talk about the future. So we know what's going on right now, right? So there's less inventory. Sellers are not wanting to list their property as much. They're wanting to wait and put it on pause. Buyers are still out and about, but not nearly as many as there were because of furloughs, because of loss of job, and because of health factors as well. Investors are still looking to purchase, but they're expecting a higher rate of return because of increased risk and volatility with what's going on here. Sellers of apartment buildings, multifamilies are still interested in selling, but we're seeing a decrease of inventory for that. Okay, so the future. A lot of this has to do with what or how long this is going to last. And I want to give you some real practical tips for yourself, whether or not you're a residential purchaser or seller, or whether or not you are somebody who is investing. So if you're a home buyer and you're looking to buy a primary home, I would still factor in maybe the cost of your current mortgage and the cost of your current rent. If that factors in and you feel confident in your job and you can find a great deal, go ahead and make that offer. You can still go out there and look at properties. And if it's a primary, there are other factors for you, right? There's more of an emotional factor. So if you find a great home, get an offer in. Right now, their sellers are more open to lower offers because there is just not that much activity right now. So it could be a great chance to really get in at a great price. Now, of course, we don't know what's going to happen in 6 months from now, whether or not we're going to regain some steadiness and stability in the market, or if we're really going to go down and we're going to see a significant drop of 20 or 30% in real estate. I personally don't see that happening. I think that we're going to get back to normal here pretty soon. So take advantage of that opportunity. If you are already thinking about buying, you have a great rate, and you find a home, and when you factor in what it would cost to rent versus your mortgage, and you feel really confident with your job, I'd say go ahead and purchase or make that offer. Obviously, there are some forms that you can use that can make it such that you can cancel and retain your deposit if something happens with your job or your source of income because of the virus. So if you're a seller, right now we're seeing a high as far as the cost or the potential sales price of a home here in California, especially on the Central Coast. So if you have equity, you've already been thinking about selling, I would get it on the market. Get it on the market as quickly as possible and get it sold. If you do that correctly and you don't overprice your home, it will sell, and then get into cash, especially if you're thinking that down the road you'd like to have an opportunity to buy. I don't anticipate there being an increase in the pricing of homes. I think that if there's anything, there's going to be a stabilization, and we're going to see the price of homes maintain at a current or at a reasonable cost. I don't see in a boom where it's really going to go up. Depending on how long this lasts, if it really lasts a long time and where businesses are going out of business, we may run into some major issues down the road. So if you're a seller and you're thinking about selling, I'd get your home sold. If you're a buyer, like I said, thinking about buying, now would be a good time. You can wait a little bit, but it all depends on if you found that home that you really like and you think it's a fair price when you factor in the rental or the other mortgage maybe that you have. Lastly, if you're an investor, I would really go and make sure that you have a clear understanding of what your rate of return is. Commercials, you're probably going to find some really low commercials if a commercial property like a shopping center or retail. I would shy away from that right now. Maybe that'll get back. You're going to find some great prices, but I think we're going to see some rocky ground for some retail businesses. And as far as multifamily, that's really where my expertise is. If you have a great rate of return that you are happy getting, you have a long mindset, right? You're looking to the future 10 years from now, 20 years from now. And as long as you get that rate of return that you're looking for, then go ahead and make that purchase. There's not as many investors out there. Lending is tight for commercial. So if you have cash, I'd get in and make those offers and see if you can get a multifamily or apartment building or a duplex, whatever it is you're looking for right now. So I would definitely get out there, make those offers, and try and find anything that's off market. Look on LoopNet, look on Realtor.com, look on the MLS, and make those offers, because you might find a really good deal. You might have a little rocky ground as far as the tenants are concerned. Communication is really important right now, but in the long run, then you're going to be doing great if you can get a good price, good rate of return. Fix and flip, that's risky business right now. I don't know what's going to be happening in the next few months. I don't anticipate pricing to go up, so you're not catching a wave, going up as far as the value of homes. So risky business. I would proceed at your own risk. Proceed with caution on that one. That's what I got for you. I'm going to make another video here that's really going to dive into what you need to know as an investor during this time. But that's what I wanted to share with you. Hope you guys have a great day. Hope you're staying safe, healthy. If you have any questions, leave a comment. Make sure to subscribe and like. That really helps out a lot. And reach out to me if you have any other questions. All right. Take care. Bye now.